Today we're talking about every dividend investor's favorite ETF, SPHD. This is going to be kind of a primer on ETFs through the lens of SPHD, so let's get right into it. So first off, for those who don't know, we need to define ETF, which stands for Exchange Traded Fund. A quick Google search gives us this definition. An exchange traded fund is a type of investment fund that is traded on a stock exchange. Well, that's not helpful at all. ETFs are very similar to index funds, which is a word you might have heard before. Think of it like owning a basket of stocks. These funds will track a certain metric, and these companies have to meet a certain criteria to be included into the fund. We won't get too deep into this because you could really make a fund about anything. Maybe I'll start the Robinhood 100, which tracks the 100 most popular stocks on Robinhood. Not sure how well that would do. Maybe you should just short all the stocks on the Robinhood Top 100. The main difference between an ETF and an index fund is ETFs can be bought and sold like any other company's stock, whereas index funds have more rules behind them. Usually they have a minimum deposit to buy into the fund, and you might only be able to sell them during a certain window. So today we're talking about ETFs, and more importantly, the Invesco S&P 500 High Dividend Low Volatility ETF, better known as SPHD. So like I said, ETFs track a certain metric, and companies need to meet a certain criteria to be included into the fund. SPHD tracks a dividend yield weighted index comprising the 50 least volatile names chosen from a short list of the S&P 500's 75 highest dividend yielding securities. Basically, there's a bunch of smart people looking at all the companies in the S&P 500, narrowing it down from there to see which ones have the highest dividend, and then narrowing it down again to see which ones to include in SPHD. Now I know what you're thinking. That's great and all, but what companies are in SPHD? I want to know what I'm investing in. So here's the top 10 holdings in SPHD currently, and they make up 28.41% of the fund. So if you think about it, 1/5 of the fund makes up about 1/3 of the fund. So these companies are carrying the most weight. At the top, we've got Iron Mountain, which makes up 3.38%. We won't get into the percent of every company here, but just so you know kind of how they're weighted and where it starts at there. Next, we got Williams Companies, Altria Group, Philip Morris International, Gilead Sciences, Progressive Corporation, General Mills, Dominion Energy, International Business Machines, and AT&T. And then all the way at the bottom, we've got the AIM Treasurers Series Funds Inc. Premier U.S. Government Money Portfolio Institutional at 0.35% of the fund. If we go up one more, we've got One Oak or One OK at 1.05%. So each company is between 1 and 3% of the fund, and we'll get into why this is beneficial at the end of the video. Next up, we've got this fancy chart, which shows how the companies are broken down by their stock market sector. At the top, we've got financials, then consumer non-cyclicals, utilities, energy, consumer cyclicals, healthcare, telecommunication services, basic materials, industrials, and technology. Some ETFs might track just one sector of the stock market and then choose the companies from there. Since this one is a more general fund, it's a little more diversified, so this is how they're broken up in those stock market sectors. Let's get into the fun stuff, but before we do, we have to talk about
expense ratio.
Since these are funds that track a certain thing, there has to be people behind the scenes that are staying on top of it, so you don't have to. Because of this, they charge a small fee that covers the expenses of the company, hence expense ratio. SPHD expense ratio is 0.3%, so it's pretty good, not even a full percent. However, there are a lot of funds that have an even lower percentage than that. There are a handful of ETFs I'm invested in that's expense ratio is around 0.03%. So it's something you need to consider when choosing what ETF you're going to invest in. Back to what everyone's interested in, the almighty dividend. SPHD, like we said, has a monthly dividend, so that's kind of a big selling point for them. Their dividend yield is 5.53% currently, and what that is it determines how much you're getting paid on a per share basis. So for the dividend yield, you take that percent times the current stock price to get how much you're going to get paid per year. So if we take that 5.53% times the current stock price, which is $34.15, we get around $1.88. And like we said, since it's monthly paying, we'll take that and divide it by 12 to get right around 15 cents per share per month. So currently in my portfolio, I have 7 shares of SPHD, so it's paying me around $1.05 every single month, which is just getting reinvested right back into SPHD. Each month it adds maybe around a penny to that, so not a ton, but it's slowly building and rolling that snowball. So eventually, it's gonna pay me hundreds, maybe even thousands. Something else to consider is the stock return. Obviously, stonks only go up, so you don't really need to worry about it. But if you were, SPHD for example, if we go back 5 years to July and August of 2015, SPHD had a high of $33.37. If we look at the stock price today, like we said, the price is $34.15, so really hasn't gained at all. It did have a high of $44.42 back at the beginning of February before Corey run of Iris came along and socked it right in the mouth. But it hasn't really returned that much, so it's kind of a weight of, okay, it's not returning as much on the stock, but it has paid a solid dividend. So that is something you need to balance out on what your strategy is and what your goals are. If we compare that to SCHD, which is the fund that I have the second most shares in, I have about 3.5 currently. 5 years ago, it was right around $38. And today it's sitting at $54, so a little bit better return on the stock. As far as the dividend goes, it pays around 40 cents every quarter, so every 3 months you get a 40-cent dividend. It varies quite a bit there. But if you broke down that 40 cents and say it did pay monthly, it pays around 13 cents a month, so very similar to SPHD. I think I'll break down SCHD in my next ETF breakdown. Or I'll look at SAHD. That's gotta be the best, right? Because it's the beginning of the alphabet. Or it's just sad. Regardless, ETFs are kind of the base of my portfolio because they do offer a lot of diversification and safety in a sense. Since they're not too heavily invested in one company and they're tracking a certain criteria, if a company doesn't meet that anymore, they get kicked out of the fund. Hence the expense ratio, since someone is doing that behind the scenes. So I think ETFs are a great way to get started investing and to start learning some of the ins and outs of the stock market. So find an ETF that tracks something that you want to, and let me know in the comments below what ETFs you are invested in. I'm trying to make YouTube mumbo jumbo a thing, so turn that like button the color behind me, then hit that red subscribe button right next to that and turn it gray. I would truly appreciate it. I'm close to 100 subscribers, which really isn't a lot, but I think it's pretty neat. So let's continue to climb this beanstalk with dividends.